All right, good evening, everybody. I want to thank you and welcome you all to our July 16th global stock market call. If you are watching this via YouTube or via Venmo, please make sure you like and subscribe on YouTube, excuse me. And if you are watching this via our Facebook feed, please make sure you like and follow the SEAL group, uh, exactly how you see it. Again, anytime, if you're watching this later, if you're watching this recording, anytime we do our global stock calls, you will always have this video present for you on YouTube. So please make sure you let your people know who are also looking to get involved and get started in the market, where they can get that information. As usual, it's going to be a pretty tight call, 45 minutes. So we're, of course, going to jump right in. I hope everybody's doing well. I have people having issues logging on. And unfortunately, we could not wait for them. We have a tight schedule today. So, of course, like we always like to start off with, we want to make sure we take care of our due diligence and show our disclosures. So I'll give you guys a quick moment to read that. A brief go over. Just, of course, we are not we're not professional financial advisors. So we're not here to tell you where to invest your money. We're here to educate you on possibilities on where your money can go, things to look out for, things in the market to be aware of. And we hope that, of course, people get more opportunity to work with us, follow us. If you have questions, feel free to always email or ask us any questions. Our email is sealgroup, C-E-I-L group, 901@gmail.com, as well as we have Snapchat, Facebook, YouTube, all of those things. And we are having people trying to log on, having issues. But we are rocking and rolling. Disclosure should have been read. Again, we are not a professional group. Please make sure that you're, referring to your professional financial advisors before making any financial instrument purchases, whether in the market or in everyday life. Even if you're buying a home, make sure you consult somebody. But one thing we always start off with, guys, is we don't just talk about making money on the stock market. We talk about financial literacy, financial education, or being well-rounded in a financial aspect. One thing that, again, and I'm not a huge Jay-Z fan, but of course, something that we've all heard from his 444 album is that something that's important is credit. I thought that was kind of ingenious for him to put that in there, but it's very true. Credit is not how financially rich you are, how smart you are with money, or how intelligent you are yourself. All credit is a numerical representation of how well you borrow and loan back money and how you leverage money. So some ways that we can help ourselves, guys, simple things, but we always go over it, paying our bills on time. Reducing the amount of outstanding credit that we have, especially with institutions, such as department stores. Now a lot of auto places, or even you can finance repair that you get done on your car. Those things come in handy, but again, if we are looking to become more financially sound, we have to reduce the amount of lines of credit we have. And that includes if we have multiple credit cards, 5 and 6 and 7. The average credit card holder has 5 credit cards. We want to reduce those. And then when we do have open credit, not maxing out the balance. I know some people are saying, well, it's easier said than done. You're making money and things like that. At one point, 20 years old, I had over 7 credit cards because at that time in college, they were promoting to you while you were on campus. And so I fell victim to the over leverage of credit. And so it took me years to not only get my accounts in order, but then to get my credit into a place where it was actually working for me, not against me. Because we know that jobs, lenders, stores you go to, home loans, auto loans, all these things use that financial number, your credit score, to basically judge what kind of person you are. You don't want to be judged by a negative credit score. You want to be able to use that to an advantage. And then again, guys, using things like Credit Karma, Experian, or TransUnion to check the validity of your credit. For my international people, your credit works a little different, but same premise. If you're borrowing money, you want to pay it back. Credit cards are one thing that really hurt a lot of individual users because, again, we feel as though it's a way for us to kind of spend money without having to spend cash. Guys, we're paying interest. It's $100 billion business, and over trillions of dollars of credit, whether home, car, personal money, are lent out, in a fashion. So it's $1 trillion business. Obviously, it didn't become so strong as to helping people. It's about how you use it to help yourself. So there's some ways. One thing I always recommend, The Automatic Millionaire, David Bach, please. I always recommend books, one that you should go and get. And then a way to help your credit, guys, you can screenshot this, you can match this, copy this, budgeting goals. Have to put yourself in perspective and your finances in perspective by being realistic, being specific in what you want to accomplish as far as a financial goal, having a set amount of time you're going to do it and sticking to that plan, and then knowing what you're going to do, what the plan is. I'm not going to go over these step by step, but again, this is something that we always want to put out there. You will always see us give these tips when we're doing our stock call. And then something, again, we always give is tips for being in the stock market. This doesn't necessarily mean things you're going to do to become rich, but these, if you're looking at this list, if you're copying this list, if you're writing it down, or if you are doing your screenshot thing via your computer, your laptop, your tablet, your phone, these are things that are going to allow you guys to be in the mentality to be successful in the financial aspect. Making a lot of money every year is not going to make you rich. And then not spending any money, in theory, is not going to make you rich, because if you're only making $20,000 a year and you only spend $5,000, well, you're putting $15,000 a year away, but how long would you have to save it for you to be rich? Whatever your number is, I guarantee if you did it for 10 years and you put $150,000 up, you wouldn't feel that you were rich, and it took you a long time to do it. Some of these tips allow you to get your mind in a place where not only can I make money at a safe rate, but how can I grow my money, whether short term or long term? And some of the key points I'm going to stick out, not all of them. Elevate your mentality, reading, studying, trying different things. I've become growing fond of painting now. Things that you can do, again, to get outside of your comfort zone and elevate around what you're used to doing. People who do the same thing all the time are going to tend to become those creatures of habit. You want to create a diversity in yourself. Don't let people make you believe investing is as hard as they want it to seem. People are going to sell you an approach or a theory or a relative motion or movement that they're going to say, hey, for 2,000, 5,000, 10,000, whatever, I can make something very complicated work for you. The key is, guys, not that difficult. And we teach people moving forward how to help that out. Do what you love. I'm a proponent of that. You have to find things that feed your soul so that you'll have energy to put into other endeavors or other things you do. Understand that in the market, the actions equal reactions. When we make good or we make bad mistakes in the market, we either reward from it or we pay for it. Understanding that will put you in the perspective where you don't have to be as risky, but you can still take, risk. And again, you have to understand those actions will give you reactions. Being consistent and also understanding when the market is most open. A consistent trader is one who comes with the same mentality to the playing game. For example, I'm a big sports guy. If you're going to play a big football game or Super Bowl, all these things you've done, you've worked your plan to when it comes time to this game, we're going to be as consistent and we're going to do the things that we practice. Same thing in the stock market. We don't do all this training to go and just close our eyes and pick a stock and hope we get rich. Be consistent. If you're getting information from outside sources, be diligent, do your research, reach out to people who will help you, or do your own research. Guys, the market is most active when it's open. Eastern time 9:30, Central time 8:30, and for you all on that West Coast and Pacific, so on and so forth. And then the last point I'll go over real quickly is do not be greedy. What do you mean, Austin? You got to get as much as you can. Yes. But what I mean is two things, or more than two, but if you're making money on a position, these are from my people who are actively trading, when you get that number in your head, we always talk about that profit number that I'm good with. When I see it, make sure you take it. Because sometimes you'll get out of a position early, so what? Secure the bag. It's always good to have the money in your hand. Some of us who have been trading know we've waited too long. We've thought that there's a little more to go, just a little bit more. Boom. That stock drops, and now we're taking $200 instead of we could have had $2,000. Whatever. Do not be greedy, guys. And then for my beginners, we had some questions come through the SEAL group. I want to touch on this real quickly, put this together very quickly. Some things that beginners can do or use to help them get and start in the game. For you beginners who are looking at what can I trade, Robinhood. I'm not going to go in depth, go and research this thing, but it's an app that's basically a brokerage, allows you to trade commission free. What does that mean? The average trader is going to pay to buy something and we're going to pay to sell it. As well as when we buy something, we're being charged commission. Robinhood takes away the commission. And it also suggests stock that you can use. However, to understand when you're using Robinhood, you have stipulations. You can only buy certain stock. You cannot short. And for you beginners, that means that you cannot make money off of a company falling. You're not eligible to purchase options, foreign exchange, or currency. So for the beginner, this is a great way to get into the stock market world and kind of buy without the leverage of, or without the fear of commissions and kind of being taken advantage of in that aspect. But just know that you're very limited in what you can do. Thinkorswim, aka a company TD Ameritrade, it's for my more beginner but more intermediate to advanced or experts. Again, it's a trading brokerage and a platform. However, it is very intuitive, allows you to have a lot of control over what you're doing, research, breakdown, screen stocks, or go and find certain trades that maybe that fit in your parameter. And then on top of that, it lets you even buy stocks, options, futures, currencies, and you can short sell or sell puts. It's a lot of things you can do with Thinkorswim. This is going to be for people who have gotten into a certain level. Investopedia, I like to call it like the Wikipedia of investment information. It gives you a self-taught application. Anybody who's even gone through the SEAL group process knows we put a lot of ownership on you going out and studying and refining what you learn. There's not any class that is going to teach you everything, and that's all you're going to do. And it's going to be a very rare amount of time you're going to make money doing that. People who who teach you continuous education, because the market is ever changing, and we're going to talk about that today. And last tip for you beginners or people who are new to the game, Trade Hero gives you an opportunity to do what we like to call virtual trading, paper trading, but it's basically a simulated stock market world where the numbers and the companies are real, but your money's not. Gives you an opportunity to trade, and then you also get to see where you're making mistakes and where your strengths are. Guys, practice makes perfect in anything, including trading and buying stock and securities. Now, let's get to the part I love the most. We have about 30 minutes, so we'll try to get through as many stocks as we can. Again, a lot of these are stock you guys have sent to us. And then some of these are our own picks that we like to give because we're also in the business of helping people make money. So Ambarella Inc., if you guys remember about May, we had a stock call. This company was on it. And where were we back then? Sure, we were around here. This company was in breakout territory, and of course, we rode the wave. We saw what true support and resistance was here at 65. This is a level for my intermediate and advanced traders to kind of put in your chart, to mark on your chart. For my beginners, don't feel overwhelmed. We'll help you learn about those things. But we see now after that true support and resistance was tested, what happened? The fall off occurred. And so through June, going into July, this company not only lost market share, but they started to trade sideways. Well, we know that whenever there's sideways trading in a market, that's an indicator of a motion getting ready to occur. We don't know which way the motion is coming, but using technical analysis and fundamental analysis put together, we knew that it's going to make its way back up to support, and that's what it's starting to do. So again, Ambarella AMBA Inc., a company I want people to watch closely because again, with it falling in line with what's been going on with the market lately, a lot of instability, great big gap ups, moments of indecision, fall offs, and we can expect the tech sector to kind of take a hit after this recent jump. Ambarella Inc. is a great opportunity, again, to watch and see and watch it hit that crest again. If you're able to play the move up, excellent way to make money. But if you're looking for when the next bottom out is, using the residual strength indicator or the RSI will help you. For my beginners, don't get overwhelmed. We also have other videos on our YouTube that you can go to and learn what we've talked about in the previous. One that was very interesting to me, that's kind of been on my radar for about a month and a half. Didn't put it out there because I didn't know where the bottom was truly until these past 2 weeks, and we saw some good movement. WebMD, they're actually WebMD healthcare services. They do a lot of different things other than have a website for you to go and self-diagnose yourself. People always think they kind of have cancer when you self-diagnose yourself, but WebMD actually has had some great growth, especially coming off about February. If we see back here, we tracked it, the bottom as well as the resistance, the top. We see right about the beginning of January, right before the beginning of July, had a huge spike up. It was pretty simple. We knew the fall was coming. and that fall occurred. And now we start to see that stock kind of trying to make it level out. This is one to watch. It may get down below the floor soon, or it may cap out here. Again, keep an eye on this one, but this could be one that, again, begins to turn this trajectory around. Not a huge amount of motion for opportunity as far as money, but again, a 5 to 7 point swing, I'll take it. One company I wanted to jump by real quick, Matador Resources. This is a commodities stock, so it's a company that deals with mining and extrapolation of minerals and metal goods in the ground. But they also, again, have been following the trend, especially coming with the deal going with oil. If you're not familiar, I can't give you a synopsis, but basically oil has been dropping. The price has been falling. You've probably been hearing it. Barrels of oil are around $50 a barrel. And the oil market wants these barrels to be around $70 to $80 a barrel for there to be profit as well as stability. That has not been the case. But lately we've seen kind of a global effort by a lot of oil constituents. So the big oil players in the game have decided we want to reduce our barrels that we're producing. So what is that going to do? It's going to create kind of a shortage in the market, even though there's currently a surplus. That shortage of oil will begin to allow the price of each barrel to kind of rise. And if the oil market can get it to between 60 and 65, they'll be at a break-even point. So we see companies like Matador, oil miners, WTMI, probably WTC. A lot of companies associated with energy and or oil or extraction are starting to feel that bump and that bounce also. Matador is one that has jumped up. It's hit its support, but we see that true support and resistance is right around 24. This is one to watch for a potential breakout. But if it, reverts, and let's say they say, man, the market is not supporting oil prices rising, of course, this company will short, and that'll be an easy fall to take advantage of. For my beginners, some of these terms may seem out of the ordinary. Don't be overwhelmed. Again, contact us. Stay in communication, like and follow the SEAL group on Facebook as well as YouTube, and we'll make sure that we keep giving information out to get you to that speed, or get you to that speed level. Here's one I want to talk about. I'm not going to take too long, but we got a lot of, I probably say we got maybe 10 or 15 requests asking us to break down Facebook for them, and it's a lot of things going on with this company. For a while, Facebook has been trading sideways, if everyone sees. And the number that we all were kind of looking at, or the two numbers that a lot of our trading teams looked at, were 155 and 150, 250. Because those two numbers seem to be relevant for Facebook. FANG, or Facebook, Amazon, Netflix, and Google, it's a group of tech companies that kind of drive the NASDAQ market themselves. We've seen they all kind of have been in a fall-off territory, except for recently. Facebook has boomed up. Google has started to recover after a terrible day they had, or week they had about a couple weeks ago. Netflix is in recovery mode, as well as, of course, Amazon has broken that $1,000 threshold. Be wary of this boom, because what we normally see in what we call an exhaustion model is as companies gas out, or let's say you're running a race and you're on the last leg, that's when you're going to give everything you've got, all the energy you've got to come across that finish line. Well, we also see that in trading, when companies are preparing for a sell-off or for the price of their shares to reduce heavily, we normally see this exhaustion where at the last bit they're giving everything they got and then we fall off. A lot of the indicators we've seen are presenting this, as well as the overall market has been in a long gain mode. And lately we've started to see a lot more choppy waters in the trading. Anyone who's been trading, whether in paper money or in live money, has seen this. And we've had to adjust how we trade over the past 2 to 3 months, than how we were first trading for probably the first 5 months of the year. Donald Trump was elected, and we called it the Trump effect, or the Trump bump effect. It seems like the market took off. And if you even look at Facebook, January, I just was saying this, and I now just look. January until now, we saw, again, about May. That's crazy. Facebook, but not just Facebook, a lot of companies had a lot of growth. The hope and promise of a billionaire business owner who's president, helping the market in regulation, helping companies in growth, big promises for corporate tax relief that will put more money in the pockets of companies, as well as adjusting the federal trade, the international trade regulations that profit companies for doing business outside of the country and then bringing their products back in, is was going to make it a little more difficult for that to occur. So what we now see is that the stock market, or Wall Street as people call it, has kind of caught up. And what I mean by that is, we know now that that's not the case with Trump. There are some things, President Trump, excuse me. We know there are some things that are going to assist us, but in the most part, we know that the market has been doing this thing because it's been a strong bull market basically since our recession in 2007, 2008. But guys, we are nearing those recession-like markers / indicators. So for all of my intermediate to advanced traders, we know that now is the time where we're more cautious than ever about how long we're going in positions, because any day, any week, any month, maybe next year or 2 years, we could experience a heavy market retraction. And when that does occur, I wouldn't want to have a lot of my money in these companies. I'd want to have my cash available, because what do you want to be able to do? The classic adage is buy low and sell high. So right now, Facebook is in an opportune time to invest, guys. If you were on our calls last month and the month before that and the month before that, you most likely have made, I would say, quite a bit of money off of Facebook, or at least some money. But again, this is more for my domestic traders. My international traders, this may apply, but you're probably hearing different things about the infrastructure of about America's trading opportunity coming up. Guys, this right now is a time to buy, even with the fear of the market falling looming, because with that one side believing that it's going to fall, which is not the majority, it's a minority. The majority of traders are doing what? They're pumping their money into the market. So we're using short scope blinders, or meaning we're using a short amount of time to determine how far out we want our money to work. If we're shortening that time span and taking advantage of movement, and I'll do a quick draw, like here, times from here to here, or from here to here, or from here to here. If we're taking advantage of these short windows, well, then there's great opportunity for us. But again, we're keeping our mentality short when we're trading companies like big tech companies. Why is that? Because we've seen days where the NASDAQ has fallen 80, 90, 100, 120 points. That will become more the norm as we move forward, even with us going into our new earnings season very soon. So guys, that's something you want to be very aware of. All right, but Facebook still right now is a value play, but I'm watching that RSI because it is tipping at overweight, so there will be an opportunity for some short puts coming very soon. All right. One company that we gave you guys about a month and a half ago, again, I think it was on that May 25th call, Weight Watchers. Again, at that time, guys, we had saw some good traction going into that call we did. Well, of course, since then, the stock has rose about another 10 points with a very small amount of retraction. So some people are going to say, well, Austin, do you think that Weight Watchers is due for a retraction soon? Well, of course. However, one thing that's very interesting about Weight Watchers that I've seen is that they've been able to kind of post very favorable, not just profits, but movement. They've done it in hiring new CEOs and new Weight Watcher technology application unveiling, and a more toned down and modified approach in bringing in clients and then retaining them. Weight Watchers done a phenomenal job in their kind of their re-slimming or their restructuring. So it's a company that even if there's a market correction that comes soon, I will be happy, because that'd be an opportunity for us to buy a discount. But to be 100% honest with you, I feel like Weight Watchers has a bit of way to go, because they're kind of getting their hand into this multi-billion-dollar business of weight and fitness that we only see getting bigger. If in whatever city you all are in, I'm sure one thing you've seen pop up more are gyms, dietitian companies, weight supplement people. You probably see billboards saying, come try this, because there's just a huge demand for people to get slim, lose weight, get in shape. I hope you guys have noticed I've kind of slimmed down a little bit anyway. But again, Weight Watchers, the company we gave you, boomed. It was a slow growth boom, but again, this is still one to watch, and you definitely do want to watch for that sideways market correction. But the reason why I call it sideways market correction is because we haven't seen a case since the company has started its upward ascent where it's truly fallen off. This is probably the largest retraction we've seen. Everything else, if you agree with me, somewhat been kind of an upward and sideways retraction. So again, Weight Watchers is one to watch, and if anybody's ever used Weight Watchers recently, please give me some insight to what things they're doing, because again, whatever they're doing, it's working. One of my favorite things to trade, the biotech, not just the company, but the ETF. IBB is one, guys, since January, probably December, what we've been talking about. It's been on a tear. Biotech, pharmaceuticals, healthcare are all on that upward trend. And it's because right now that is the prevalent, one of the big issues that looms over our country. How are people going to be taken care of health-wise? What strides are these companies making to be better? What drugs are passing their phase 2 and phase 3 clinical trials? And then how are markets merging? We've seen a lot. We actually had a biotech call probably a month ago. Gave you guys a lot of biopharmaceutical companies and technical companies that are making strides and doing big things in the aspect of technical firms. If you're nervous about trading the individual company, an exchange traded fund or ETF is a very good way to kind of put your money on the broad scope. So when the overall sector does well, the ETF does well. And when there's declines in the sector, we see that represented in the ETF also. It's also safer because if you're investing just on the individual company, that night that you went to sleep and you're up 10 grand, the company could fail a phase trial, and in the morning you're down whatever. So investing in the ETF is going to allow you to kind of have a slower movement. But what I love about the IBB is it still has enough movement to really pay out. And before that big call, guys, remember, I don't know if you all remember, if you joined us on that call, we spoke about the IBB or the biotech, booming out because it had been on a recent downtrend. And it was trading cheaper than we were used to. Usually trades around $300 a share, and the ETF was right at $289 at the time. And so we saw this. Our call, we actually marked that the stock would take off during this week. And what happened, I was kind of made a liar out of. It took about an additional week, but boy, oh boy, like I said, on the last call we did on the marijuana stock, I could not have anticipated the ETF doing the numbers it did. Well, what occurred? A slight retraction, and guys, we have sideways motion. So we're now seeing maybe a new level of where the stock is trading at on a norm. We're not going to say that just yet, but again, that 300 marker is where we're used to. And if you're able to see this, you notice that I think this should be the 50 or the 100-day moving average is right at 300. The shorter moving average is right at 310. So definitely we see some growth in this company. Or in this ETF. We see growth. I don't see it changing any. I only see it getting bigger. And I think when there's a sell-off on tech, we'll see, of course, the biotech ETF fall off. But that would be another opportunity for us to get on discount, especially if we're in a zone where the stock is kind of revaluing itself. People are saying, hey, these biotech companies are doing their thing, and we feel that maybe we were undervaluing it previously. But again, the only one we'll know is as we continue to watch. But again, biotech is an easy pick, and it's a great pick. Boom, boom, boom. Let's clear out. All right. One that actually, again, been on my radar a long time, guys. We've been trading this since December. Gold. We know what their true support and resistance is. I like to say 123. It's just been a number that when it gets around $123 a share, again, this is a trust or consider an ETF, an exchange traded fund. We're not buying the actual commodity gold. We're buying the exchange that represents how gold is doing. Why do we want to do this? Again, it's safer. It's going to be a safer bet. We're able to track the stock or the ETF, which is a stock, a little bit better. And we're not susceptible to the big swings that occur in the commodities market or the futures market. Or what do I mean by that? If for some reason, like China, we found out a couple months ago, a huge deposit of gold was found. And the global gold market took a huge hit. Why was that? Because not only is China already kind of capitalized on manufacturing growth and a sustainable economic growth as they're growing, now they're kind of holding a commodity. They hold the value in their hand. Well, investors got nervous about that and sold off. But we see now that it's going to cost them a ton of money to mine and excavate that gold. And so we're seeing the market trying to stabilize itself. It has fallen way, 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 way below its floor. And of course, if we had a call last week, we would have been able to give you all this ETF or this stock earlier, but we didn't. But again, there's still opportunities. You see that the stock is trying to break out, but it's still being suppressed. There's still upward motion for this stock. And we see that since December, it's been on a tear. So again, gold is one. Here's one I want to get to. MSI, Motorola Solutions. We all are familiar about BlackBerry trying to unveil, well, if you're not, you are now. BlackBerry, a old school big time phone maker, manufacturer, is trying to get back in the game, as well as Motorola. And Nokia actually has share in Motorola. Still some of their proprietary technology is still associated with the Motorola brand. And Motorola is trying to make a good breakout or good movement. Since early this year, or even really a little later than last year, Motorola has been on a choppy roller coaster of a ride. But what we're still starting to see now is that it's actually starting to do a little breakout. It's wedging upward. And that started right around close to the middle of May, going into the end of June, where we've seen the companies kind of working its way up. If we look at the tops of the peak, or what I mean by this, I'm like, what? Here, the tops, where it topped out, where it topped out. Motorola, other than this correction here, has kind of been on an upward continuation. But when it does that, it loses so much of its market share. It's literally trading from the floor to the ceiling, which normally we see this in companies who are getting a whole lot of volume, or they have information that's coming out that is going to support and help the company, or something that's driving the motion. That's not really the case here at Motorola. It's not as if they're releasing a new phone or anything. The company is just, again, they've been streamlining so much over the past 5 to 10 years that they're starting to see some of the growth again. Motorola to me is a great company to watch. I believe it's actually going to fall a little bit more, or it's going to have quite a decline before it starts to make that big breakout. But again, we're moving into the tech sector side. There's a big sell-off that's going to occur when? Nobody really knows, but we see it coming pretty soon, because a lot of the tech companies, if you've been trading, even in virtual, Nvidia, Microsoft, Amazon, Facebook, all these big tech companies, what have they been doing? Pushing and pushing and pushing and pushing the limit. Well, eventually the stock will become exhausted, and we'll have no choice but to sell off. The market will sell off. And again, guys, if the sell-off happens, don't look at it as, man, I lost out on the fall if you don't get a put. Look at it as like, hey, I'm getting the opportunity to buy these stock or the options on discount. That is a great way. But for my medium, intermediate to advanced traders, if you're utilizing indicators like the MACD, the RSI, Bollinger Bands, slow stochastic or fast stochastic, even if you're using the commodity channels, these are ways for you to understand where these stocks are in their movement and the probability of where that direction will go. We see it getting, again, toward a cap out, or it may be at the cap out now. It's going to have to be a fall. But we notice that each time that it falls, the level or the board is getting a little steep. Excuse me. So, yeah, MSI, Motorola, one to watch for the fall when the big tech sell-off occurs. But this would be one that, again, cheap options, good spread, great way to make some good, quick money. And then again, one of my lovely biotech companies that makes a pretty good living, makes a pretty good amount of money. Biogen, BIIB. You've probably heard us talk about this one again in our May call when we had when we knew the stock was kind of overpriced near that true support and resistance. And again, some of you are saying, what is true support and resistance? What true support and resistance is on a basic level is it is a line or it is a numerical value. So like this number here, that we'll just say 295, that represents a barrier for this stock. It's a barrier. It's a theoretical barrier that occurs. And regardless of what's going on, normally when it reaches this level, it either bounces the other way or it shortly stays above that level and then falls out or booms up, whichever one you want to look at. 295 has been a level for Biogen for a long time. And if we're looking here, we see that every time Biogen has gotten right above that 205 marker, 295 marker, what's happened shortly after? We've had a big drop off. Stock works its way back up, gets to the floor, which that is here. Looks like about 245. So again, when we made this call a while ago, huge gap up. We all were kind of worried about Biogen around this time because there was a lot of sideways trading. So if you weren't precise in your trading, you kind of lost a little money. But again, once we got close to that 295 marker, what we prepared for the fall, and like I like to say, hot damn, we couldn't have pictured something this good. But this again, for my beginners, you say, well, the company lost money. How did you make money? Reason that is because we have the opportunity when we're trading stock or in options to what we call a short sell a company, buy insurance on a company, or have a put on a company. And it means that when the company's price falls, we lock in a sale rate. So if the company's price falls and we lock in 290 as a rate, what we are saying is that if this company falls below 290, the company has to buy it back from me at 290. And the further and further this stock falls, the more and more you can accumulate before the company has to buy it back from you. Or in a short sense, we get paid when they fail. If you're more interested about ways of learning how to do that, of course, communicate with us. And that's what we do. We teach people how to capitalize on these things that occur every day in the market. That is the only given that we have, is that there will be green and red, meaning the market will go up and down. So again, Biogen, one that is gotten to its current wedge down resistance or ceiling. So we do expect to kind of take a hit down before it goes back up. But if this stock finds a way to rally up toward 300, know that this is an opportunity for you to have a great amount of money when it shorts. All right. And then the one thing I always want to do is let people know, again, we give these stock. So we have certain classes and certain opportunities for people to learn and dive deeper. Feel free to contact us again on YouTube, Facebook, Instagram, Snapchat, Twitter. All of those are the SEAL Group or SEAL Group. We thank you for joining us today. If you have any questions, feel free to reach out to us. You know who I am, and I thank you all for your opportunity. Y'all take it easy. Have a great day.